At the New Jersey SBDC Network, our mission is simple: to help businesses grow and succeed. Our consulting, training, and information services make it easier for businesses to reach their potential. Whether you're currently in operation or just starting out, we have the right tools, resources, and expertise to help you succeed. Visit us online to get started on your path to success today.
A pleasant good afternoon to everyone. My name is Takoa Bell. I am an event coordinator for the NJSBDC at Rutgers-Newark. And on behalf of Dr. Tendai Nzuro, the regional director, I would like to welcome you all to our Taking Control of Your Company Finances webinar. For those of you here that are unfamiliar with the SBDC, it stands for Small Business Development Centers. And here at the New Jersey Small Business Development Centers at Rutgers-Newark, we serve as the premier provider of business training and technical assistance services to establish small businesses, startups, and as well as to entrepreneurs. We are one of the 12 centers in the NJSBDC network, and we service those in Essex County. Our center is hosted by the Rutgers Business School and funded through a partnership agreement between the Small Business Administration, Rutgers University, and the New Jersey Business Action Center. Our mission is to help entrepreneurs as well as business owners start and grow sustainable, successful businesses through the delivery of one-on-one business consulting, training, and technical assistance programs. Now, these services are provided to you at no cost and are paid for by your tax dollars. If you or your business is located in Essex County, our website is www.rnsbdc.com. And on the top right-hand corner of our site, we have a button labeled Request Counseling. And clicking on that button will lead you to fill out the information, including the help you are seeking with your business. And within 24 to 48 business hours, a consultant will reach out to you for an assessment. And for those of you here that are not in Essex County, our headquarters website is www.njsbdc.com. And on that website, you can type in your county and it will refer you to your local SBDC office. For the benefit of everyone attending today's webinar, we will be taking questions via the chat and Q&A features. If you would like to ask a question via audio, I will give you the ability to unmute yourself and ask your questions that way as well. So feel free to post your questions and we will do our best to respond during or at the end of the webinar. For those of you here that are new to our webinars, you will be given a copy of the presentation slides along with a video recording of this webinar will be emailed to you within 48 to 72 hours. So you can always refer back to this information long after the webinar has ended. It is now my pleasure to introduce to you today our presenter for today's webinar, Mary Baker. Mary is the CEO and owner of Baker Tax and Accounting Services and is an SBDC consultant here at the NJSBDC at Rutgers-Newark in the areas of taxes, accounting, bookkeeping, and financial management. And now, without further ado, I will turn today's presentation over to Mary.
Hello. Okay. Good evening, everyone. How is everyone this afternoon? I hope everyone is great and you're really enjoying the weather. First of all, I would like to thank you all for being here, spending your day with us at SBDC. We want to thank Rutgers-Newark for having us and for providing us with this service. My name is Mary Baker. I am the founder of Baker Tax and Accounting Services and Get Your Business in Order. We are a company that's been around for 40 years. I'm not aging myself in coaching and helping individuals and business owners to reach their financial goal. I help to mentor people into turning their passion into wealth. And today it is my honor to be here today to help you understand how important it is to get your finances in order and to understand your business numbers, which tells the story of your business. So thank you all for being here. I look forward to communicating with you and answer any and all questions that you may have today. Thank you. So today our agenda will be, why is it important to know your business finance? I would say out of the 40 years that I have been in this business, this year and last year with the COVID pandemic has really taught a lot of us as business owners, why is it so important to know our business numbers, the finances in our business. And one of the reasons why I say this year has really, out of 40 years, being a business owner, you always learn, right? I learn every day as a business owner. But with the unforeseen circumstances with COVID and how it had impact all of our businesses, there were a lot of businesses out there this time that just they did not receive any of the grant money that was available, the PPP money, and any other money that was available, grant money. And one of the main reasons for that was because the people, the business owners, just did not have their business finances in order, or just didn't know their business numbers, so that when they were completing these applications or when things was going on, they did not have these numbers. And because of that, a lot of people did not qualify for PPP because they just didn't have the right numbers, or they did not get the full amount that they were entitled to because they did not know their business finances. So we're in mid-year of 2021. We do not know what the rest of the year is going to look like for us for COVID, or how some of us may have been closed since COVID. And so we don't know what going forward is going to look like, or how do we prepare for going forward. And the first way we can do this in our business is knowing our business numbers. So we'll talk about how important it is to know our business finance. What is cash flow? One of the main topics of our business to keep our business running. What are some issues of cash flow problems? What is the cash flow statement and a profit and loss statement, which a lot of the businesses and banks, when you go for loans and things like that, they ask for. What are business finance ratios? And then we have a question and answer session. Okay, so let's talk about why is it important. So one of the main things I like to think about is a quote from Bill Gates. He has said, I have been struck again and again by how important measurements is to improving the human conditions, which is a quote from Bill Gates. Thank you. Thank you. So know your finance. Business finance is very important. It is the art of managing your company money. It is what keeps you personally and business going, is your finance. The role of the finance business is also to make sure that there is enough funds to operate and that you are spending wisely and investing wisely in your business. The importance of business finance lies in its capacity to keep a business operating smoothly without running out of cash, while also securing funds for longer term investments. And I cannot stress this so much. What happened to all of us in our business last year, that we was not prepared for long-term with our business operation, with our business shutting down or closing down. These are things that we just did not consider. The lesson learned here is now is the best time, if not any time, to take seriously your business finance. If you did not receive any grant money, or if grant money is out there, I want each and every one of you today that's on this webinar, so that when the opportunity comes again, you are prepared on paper to tell your business finance story. So know your business finance, and it's about managing your company's money. Okay. Okay. If you want to measure, the focus is on your business outcome, your financial historical focus. And I am going to focus a lot on what it's all about in your money and in your finance. So if you want to measure your outcome, the focus is your revenue minus expenses equals your profit, right? It's your revenue minus expenses equals your profit. And this is the outcome of your business, which is so important. Thank you. Okay. So the thing is, we have 3 goals and 3 statements, right? We have these statements that shows important part of what banks need with PPP and things like that. There are 3 main statements that we use for this. To sell your goods and service, right? To sell your goods and service more than it costs to you, you provide them with an income statement. This gives you the net income of your business. And so, like a prime example, let's say, for instance, for the ones that did receive the PPP loan, and the first one, which focused on our net income. What was our bottom line when we, once we had the gross income, we had our expenses, and then what was the bottom line? What was the net income of that? And 2, to maintain a healthy cash flow is to keep the company running. Statements of cash flow, operating cash flow. Cash flow is, if anyone doesn't know, cash flow is the money that is moving, flowing in and out of your business. Cash is coming in from customers or clients who are buying your products and service, and cash is going out of your business in the form of payments for expenses. So we're going to cover that and what is cash flow. And then we get a return. The next statement, which is the main statement, is to get a return on our investments. What we invest in, what is the return on our assets? And that the balance sheet shows us that. So with this, we have 3 goals, which is 3 statements that primary that banks and financial institute asks us as a bank, as a business, to see how our business is operating. It is the income statement. Sometimes we refer to it as your profit and loss statement. We have a statement of cash flow to see how healthy cash flow is running to keep our company running. And then we have the balance sheet, which show us the return on assets. Thank you. Next. Okay. What is cash flow? Cash flow is the money that you have coming in that customers pay, clients pay for your service, and money going out, which is the expenses you pay to keep your business running. Cash is coming in from customers or clients who are buying your products or service. Cash is going out of your business in the form of payment for expenses. This is one of the most important things as a business owner that you should know and understand totally to keep your business afloat, is the cash flow. Okay. We do have, there are many of times as a business owner, we do have cash flow problems. And there are some major issues that causes that cash flow problem. Cash flow problem can be that we do not have enough income coming in to cover the expenses that we have going out. One of the major cash flow problems that we may have is not having enough cash reserves. And so we have learned this during this period of COVID that some of our businesses were shut down. We had limited income coming in, right? But we still had expenses going out. And of course, who would have thought we needed to save at least a year and a half of cash reserve, right? But that is one of the major problems that we have as a business owner. So you should, as a business owner, always have some type of cash reserve somewhere so that if anything happens or comes up, you do have enough cash to keep the business afloat. Another problem that we have with cash flow is slow paying invoices. It depends on whether you have a product or whether you have a service. If we are producing and putting out more products quicker than we are actually receiving the payments coming in from our clients and our customers, this can cause a major cash flow problem as well, because we're producing and putting out, but we're not getting back income in to cover what we're producing in a timely manner. So it's so important that you think about your slow paying invoices and take a look at what clients or customers are paying slowly, or you can offer them an incentive or something like that where they can pay on a timely basis. The third major cash flow problem is high overhead expenses. Do you know what is your highest overhead expenses? And if this expense is high, is it making up for the income that is coming in? Is it producing more income? Is it not producing enough income to cover the overhead expenses? Or you may have some overhead expenses that are not economically covering the income that's coming in. So you want to take a look at that. You want to go back and look at that and analyze that and see what's going on. Another thing is excess inventory. If you have a product and you have a product or whatever you are selling, right? And you say, okay, I just want to keep enough in inventory so that when a customer orders it, I have it on hand. Is that economical for you? Do you have items that are in inventory and you may not want to purchase that excess amount because no one orders that product, right? So say, for instance, if you own a restaurant, for example, and most of your customers orders turkey as opposed to beef. So do I need to keep as much beef on hand as I do turkey, or do I need to keep more turkey on hand and less beef, which makes a difference, because eventually that beef will have to be thrown out if the customers doesn't order it in a timely manner. So you need to think about your inventory, excess inventory. Do I have the proper inventory on hand for my customers? Will this give me a turnaround properly for that? Or if you have storage space and you have inventory in there, am I using up majority of the inventory or space on items that are not being used, and it's just holding space, whereas I don't have enough space for the items that are having quick turnaround? So you need to consider that as well. Another issue with cash flow problem is incorrect sales forecasting. So incorrect sales forecasting goes back to inventory as well. Am I expecting to, let's say, do I expect more sales a certain part of the year? So let's say, for instance, you are a landscaper, And so you know majority of your sales are during the spring and summer months in New Jersey and not in the winter months, right? Do you keep enough fertilizer on hand? Do I think my sales or my employees, what is my sales going to be? Will I have enough to cover them for the winter, as opposed to do I have enough for them on the fall? So if you underestimate your sales forecasting comparison with your expense, it can cause you a major cash flow problem. Another major cash flow problem is employee theft. This is one of the major problems that most businesses have, is with employee theft. I have inventory. I know I have inventory to fulfill my clients' orders, but when I go and look in the inventory, it's less than I expected, right? So what does this cause? But I don't account for it in my numbers. I don't account for this as income. So what happens? I do have a cash flow problem, because now I pay for inventory, it's missing, right? And so it's not making up for the sales that I anticipated because of employee theft. And the last, and definitely the number one, I say as well, is bad or no bookkeeping. I'll tell you, during this COVID period, it has really, really damaged a lot of businesses because they did not have their books in order, their bookkeeping in order, or bad or no bookkeeping. You as a business owners, if that's too much on hand to handle all of that, hire someone to do that. Because just knowing your numbers and your bookkeeping will save you tons and tons of money. Because if you know what's going on in your business, you may say, hey, I'm running low on cash. Can we pull back on this for this month or this week, right? But if you don't know and you're just going and you don't know your numbers, you don't know what's in accounts payable, you don't know what your accounts receivables are, then you're stuck. And that can cause a major cash flow problem. So these are some of the major cash flow problems: not having a cash reserve, slow paying invoices, high overhead expenses, excess inventory, incorrect sales forecasting, employee theft, bad or no bookkeeping can cause major cash flow problems. Thank you. Okay. The thing we're going to talk about today is one of the major statements is the cash flow statement. This is usually, we can call it the cash flow statement. Some people refer to it as, it could be your profit and loss statement. But one of the major things is when you are applying for any type of grant, business loan, or anything with business, one of the major things that a financial institution will ask you is for your cash flow statement or your profit and loss statement. Some people refer it as cash flow, some refer it as profit and loss. The cash flow statement, it's a summary of the actual or anticipated incoming and outgoing of cash in a business over a counting period. It may be on a monthly basis, it may be on a quarterly basis, it can be on a year basis, or it can be on a year-to-date basis. What is the cash flow of your company looking like? The cash flow statement assesses the amount, timing, and predictability of cash inflow and outflow, and are used basis for budgeting and business planning. This statement will help you determine how your business is running. You can look at this at a year-to-date basis, if you like, a monthly basis, which I recommendation, or definitely a quarterly basis. in order to run your business and keep it afloat. Please do not wait until the end of the year to do that. Attached is a sample of a cash flow statement. This statement shows you have an opening balance, you have your cash incoming out, okay, which is your sales, your asset sales, your receipts, or any type of income. And then you have your cash outgoing. It could be your purchases, your accountant's fee, of course, advertising, marketing, bank fees, any loans you pay out, employment, telephone, any overhead you have, wages, any overhead that you have for your business. And what this does, this cash flow statement, or we can refer to it as a profit or loss statement, gives you what your current balance is, your closing balance on hand. As I say, I recommend that you look at it on a monthly basis, definitely at a quarterly basis, and do not wait until the end of the year when you file your taxes, because you want to plan it out. And by, excuse me, and by looking at this, it can help you plan out your tax filing as well, right? It also can tell you, okay, where do I need to cut down? It can help you with budgeting for your business. Where do I need to cut down here? Will I have enough going into next month? Will I have enough income going into next quarter? Just to make sure that my company has some type of cash flow and we are ongoing with that. Thank you. The next thing we're going to go into, which I think is very important, some of these may refer to all of us, and then some of them may not. And so this is what we call, these are business ratios. If you are not a numbers person, these are numbers and ratios that you need to consult with your accountant with. And so on a monthly basis, or even if you just want to know how this is running, what is going on with this? Are we staying uploaded with these? What do I need to do? How much do I need to sell this month to cover my expenses? What do I need to do to make sure that my business is afloat, or that we are showing enough things so that it will run our business on a proper basis? So we have several business ratios, and you will get a printout of this chart if you're not a numbers person. You will have the quick ratio we will discuss. We will have your current ratio, the gross profit margin ratio, the net profit margin ratio, the return on assets, the receivable turnover, receivable days, inventory days, and debt to equity ratio. These are very important ratios that, even though I don't know if you use these in your business, but you should start using these in your business, planning for your business. These are some crucial numbers to help your business to grow and just to stay afloat. Thank you. So the first ones that we are going to cover, we call these liquidity ratios. And what these are some of the ratios that the bank will use when you're applying for financing or financial institution. Liquidity ratios measures your company capacity to pay its debt as they become due. So what this does, it's saying, okay, if this company has debt, is this company capable of paying their debt on a timely basis? You may be able to pay them, but are you able to pay them on a timely basis? So the first one we have is quick ratio, And the quick ratio usually appears, you can get this information off of your balance sheet, right? And so what this does, it is estimating at a glance what your company is facing if you need to liquidate immediately. Will you be able to do that? And with this quick ratio, you should be able to determine. You're going to take your cash plus your accounts receivable. Accounts receivable is outstanding receivable income that your client or customer has not paid you. So it's the cash plus your accounts receivable divided by your amount payable and of your expenses and other current liabilities. This will give you a quick ratio on if you are able to handle your debt and pay it on a timely basis. The next liquidity ratio is current ratio. This number is also on the balance sheet. This is one of the ratios that most banks and financial institutions use to help you to determine if they are going to give you a loan or not. The current ratio is used by bankers to determine your level of how your business can be solved. The rule of thumb on this current ratio, it should always be above 2. And how you could determine your current ratio, you could take your cash, your accounts receivable, inventory, and any of your other current assets and divide it by your accounts payable and other liability. So basically you're taking everything that you own, all your assets, right? Your cash, your accounts receivable, how much you have on hand in inventory, and any other assets that the company owns, and you're going to divide it by your expenses and any current liability you have. And that would give you your current ratio. Now, the thing about this, always keep this in mind, this is something that the banks, financial institutes always use when they're determining whether they want to give you a loan. And it should be above 2. So that's why they always ask, let's see how much you owe, what's going on, how much income you receive, and this is what they use to determine that issue. Thank you. The next ratio that we use, we call it the profitability ratio. So the profitability ratio measures your company ability to generate a return on its resources, right? So we have a gross profit margin. This is the income statement, right? This is usually shown on the income statement. The gross profit margin is the total sales minus cost of goods sold, right? The gross profit margin is gross profit as a percentage of total sales. So you're going to take what your gross profit is, right? How much you receive from your client without any expenses, and you're going to divide it by how many sales that you made to get that gross amount before any expenses. Okay, that gives you your gross profit margin. And like I said, if these are too many numbers, if your accountant should be able to provide this information to you. Okay, if they're doing, or who's ever managing your books on a monthly basis. The next profitability ratio is a net profit margin. This information is also on your income statement. The net profit rate is net profit as a percentage of sales. So this one, the net profit margin, is your net profit. That means your gross minus your expenses divided by your total sales. right? To get to that net profit. So it would be your gross income minus your expenses, which will give you your net profit divided by your total sales. The next ratio, profitability ratio, is the return on assets. This information is on your income statement and your balance sheet. This is a key bottom line measure. This indicates whether your company is effectively generating profit from a given level of assets that you have, right? And so with this here, your return on assets is your net profit, which is your gross minus your expenses and the average of your assets that you have. So that's how you will get your return on assets. Now, these numbers may seem complicated or it may seem too confusing, but these numbers are great in determining how to move your company forward, right? If you need to move your company forward, or how you're planning your business, your budgeting, your business planning. What do I need to do? How much do I need to produce to move to the next level in my business? So these numbers are very important. Thank you. Now, the next one is efficiency ratios. These ratios evaluate how well your business manages assets and inventory. So if you are a company that sells products or have inventory, these ratios are very, very important, right? These are very, very important. And if you are a service industry, you can implement some of these efficiencies ratios as well. Receivable turnover, which is usually located on your balance sheets, it tells you how quickly your company is able to collect on your accounts receivable. So now this is important because this falls back on your cash flow. All of this fits in and it falls back on your cash flow issue. Sales, receivable turnover, you're going to take your total sales and your average receivable. On your average receivable, on these sales, how much your total sales are, how much did you actually receive, right? How much you actually receive. And this would tell you your receivable turnover. This number is great. This number you need to know. You definitely need to know this when you are trying to calculate your cash flow and need to know what your cash flow is, because you may want to take this and say, hey, maybe my receivables need to be more. Maybe I need to offer some type of incentive or something like that so that my receivables comes in on a timely basis. The next thing you need to determine is your receivable days, which is also included on your balance sheet. This ratio measures the average time your company required to collect accounts receivable during a specific time span, right? To get this number, your average receivable, you're going to take that number, how long it takes to get your average receivable, times 365 days, which is the days of the years, divided by sales. How many days, average time, does it take you to collect your money from your clients or your customers? This you can use as your service as well. Do you collect it on the spot? Do you give them a 30-day, 10-day, 15-day turnover period, 90-day turnover period? Do I need to change this? Is this consistent with my business? Is this consistent with my business cash flow? This is something that you really, really want to think about and know. The next one is your inventory turnover. This is also on your balance sheet. This tells you how quickly your company turns over its inventory. This is so important. If there's anyone that has inventory in storage or food, you need to know this. It is the cost of goods sold, how much you pay for your inventory, and the average inventory, how much divided by the average inventory. This is so important in planning your business, because this helps you to determine whether or not you need what you need to keep in inventory, what you can hold off on inventory, how much space are you spending money on space. This is so important. Also, in this ratio is inventory days. This is on the balance sheet as well. This tells you the average number of days in a specific period between the time you purchase your product, cost of goods sold, and the sale of that product. And that's with the average inventory times 365 days, which is a year, and the cost of goods sold. So now this efficiency ratio, these ratios are very important, especially for people who has products. You want to know the turnover rate. How long should I hold this? How long should I keep this information in storage? It just helps you to run your business more efficiently. It is so important in your bottom line with your cash flow numbers. Thank you. Okay. So the next one we have, which is very important. This one is debt to equity ratio. This ratio, and I cannot express this enough, is extremely important to lenders, as it indicates your level of solvency. It shows how in debt you are in comparing to your equity. So this is one of the things we have as business owners on our personal side, as well as our business side, right? This ratio, the banks use all the time. And so a lot of people you may hear say, hey, I have great credit. My credit score is great. My credit score is 700 or 800, but they decline me. They decline my loan. They decline giving me any credit, anything like that. And one of the reasons for that is because your debt to equity ratio can be a killer. It's just as bad a damaging as not having or having bad credit. Because if the bank feels that your debt, your company's debt is higher than your company's equity and your company's worth assets, they will not give you a loan, because they feel that you will not, you have too much debt and you will not be able to pay them back on a timely manner. This also goes when you're even your personal credit. So if you're not using your business numbers and you're using your personal credit, this also is a factor as well, because your debt needs to be at a certain level in order for the bank to give you any type of credit or any type of loan. So it's so important that you know these numbers, you keep that amount as low. Also, as a business owner, I think, I say it's very important that if you are doing business, you need to get a DUNS number, Dun and Bradstreet, and try, if you cannot, avoid putting any of the business debt on your personal finance. You want to create business credit. It is so important. I tell everyone that, because you don't want to mix those together, because you can get to a point where if you're placing all of your business debt on your personal credit score, then when you try to go purchase something for yourself personally, say like you decide to purchase a home or something like that, and you have all your business debt on your personal, you may be declined because your debt to equity ratio is really, really high. So it is so important that you remember this and make sure that you know. You want to ask, if you're going to a financial institute, what is the ratio they're looking at? And ask them, how can I bring this down? Or what should I do so that I can qualify for your business loans? So all of those numbers are very, very important. I just want to go back real quick. We still have some time, and just go and let you know what some of those ratios. Just remember, I know this was a lot. You can consult with your accountant, and they can help you with this. So for efficiency, it tells you how well your business is managing its assets and inventory. You want to look at your receivable turnovers, your receivable days, your inventory turnover, and your inventory days, right? Thank you. And make sure you know your cash flow, what your cash flow is, and how great they should be. Thank you. And so with that being said, I am open for any questions that you may have at this moment. Do you know your business numbers? And if not, what numbers do you feel that is important? So I want to thank each and every one of you. And if you have any questions, I am open for any questions that you may have. Thank you. Okay. Okay. So does anyone have any questions? I have time. If you have any questions on this or with this time, you can pick my brain. If you have any tax questions you need to ask, I'm here for that as well. Or any of the numbers, or if you have anything that you need to be asked in your accountant. Okay, Joyce. Hi, Joyce. Okay, hi, Joyce. So you said, where can I find a good bookkeeper? My company offer bookkeeping services, but there are different places that you can get a great bookkeeper. If you reach out, we can get you a great bookkeeping. What type of business are you in, Joyce? And it also depends on what you're looking for. And so when you do this and when you're searching for a great accountant or great bookkeeper, they need to understand what you are looking for, your business, and your strategy of where you want to grow, how this business is going to grow. So I always tell people, when you're looking for accounting or bookkeeping, your accounting, okay, e-commerce, okay, Joyce, when you're looking for a bookkeeper or accountant, that accountant should be sitting down with you, and now is the best time of any to strategize for the next tax season. What is your financial goals? What are you looking for? What is the objective for your company? Are you, how do my company need to grow? What do I need to be doing now this year for the next half of the year, right? We're in June already, right? So that my tax implication is not much, or how can I decrease this, or where do I need to go from here? So these are some of the things your accountant needs to do, not just prepare your taxes. You want someone as a business owner, not just to prepare my taxes, strategize with me, prepare me for when I file my taxes next year. What are the ways I can reduce my tax bill, or what do I need to do to prepare myself to help me grow my business? or my tax return, things like that. So yes. Okay, Joyce, she says she's in e-commerce, manufacturing, distribution. Yes. So we can find you a bookkeeper. Okay, Joyce, you're doing this by yourself. Okay, so you can SBA, you will reach out to SBDC and they will give you my contact information, assign you, and then we can help you with that information, Joyce. Thank you. And the information will be at the end of this session where you can contact SBDC and we'll be able to help you. Thank you. You're welcome, Joyce. Thank you. Anyone else has any questions that they may have? You can ask me some business tax questions, some things you need to strategize. What do you need to be thinking about now that we are in mid-year? We don't know like what the new tax laws will be for 2021. They usually let us know that like the end of the year, but I know this year has been 2020 taxes has been a change for all of us as business owners. And so now is the time to plan that for next year, just because of what went on with PPP and all of that stuff. I know some of us didn't have a problem, some of us did, but I would like to see that all of you prepare. So if anything like this comes up again, you are ready for it, at least your paperwork. Yes. Okay. Okay, so Mal, how much do I add for all taxes and the product prices? Can you recommend any app for a small startup single member? So, Mr. Mel Chase, yes, we do recommend. I use QuickBooks, and the reason why I use QuickBooks is because it's a little user friendly, but most apps accept QuickBooks, and it's just so easy. If you use it, you can send it to your accountant. Your bookkeeper could use it and send it directly to the accountant. Yes. Ms. Williams, yes, I do reside in New Jersey, and if you reach out to SBDC, they will give you the contact information. And if anyone wants any counseling service with me, you can reach out to SBDC and they will connect you. Yes. Anyone else has questions? Anyone else has? So I do have a general question, which I love. We don't have that many attendees. How many of you actually received the PPP? And if you did receive the PPP, do you feel that you received the amount that you were eligible for? And if not, why not? Which is so important. And that may be something that you want to work on going in the future of being ready. I always say be ready so you don't have to get ready, right? As a business owner. Because there are still, I guess there are still some things going on out there. I believe the SBA has still have the EIDL is still out there until the EIDL loan is still out there for working capital until December 31st. They have extended that. So there are some things that are still out there. The PPP no longer, they closed that down May 31st, but there are additional stuff out there. The EIDL loan is still out there. I think they have some stuff for restaurants. So there are some still loans out there and grants out there that you can still apply for. It's just that the PPP is no longer there. Any more questions that you may have? Okay. No open questions, right?
Yes. Feel free to ask your questions. If you feel more comfortable asking your question via audio, I can go ahead and unmute you so that we can do that as well. We do have about 30 more minutes, so we can definitely answer a few questions in that time.
And even if it's not questions relating to the ratio, if you have any tax question or any business questions that I think I can answer, I'll answer those for you as best as I can. Let's see here.
I see a question in the chat.
Okay, so yes, we do have templates you can share. We will share the cash flow statements with you. You are going to get a copy of today's presentation, but we also have the cash flow statement in Excel format that you will receive as well. So we do have those templates for you as well that we do have that we will give you that as well. Any other questions? So we have 30 minutes. We leave the 30 minutes up for you to ask any questions, or even if you have any questions about SBDC, if this is the first time you ever attending any of our webinars, you can ask those questions. We have counselors in other areas, not just accounting. We have marketing, we have a counselor in pretty much all fields. So even if you have any questions in that area, you can put that in the chat and then we'll get someone to help you or assist you with that. Any other?
Okay, I'm not seeing any more questions.
Okay.
Oh, we have one in the chat. Oh, we have two in the chat.
Okay. So Ms. Williams, she said, okay, is the best method of accounting to use is accrual? Yes. So we do currently use accrual, but there are some businesses that use cash, which are strictly cash, and they only want to go cash, but you can use accrual. Yes. If I don't have any sales yet, how can I do a cash flow? So now, if you do not have any sales yet, what you would like to do, Ms. Williams, even though you don't have any sales, you want to create some type of budget, right? You want to create some type of budget estimate of what the cost of your product or your service is. Even if you are a service business, a lot of people say, I don't have a product, I have a service. How do I put time on that? So your time, you're going to put an amount on your time, which can create your budget. One of the things I always recommend to my business owner, if you are creating a budget for your business, please include your personal budget. And the reason why I say this is because you have to, I always believe if my household and my personal side is not in order, I'm not going to be fully focused on my business, right? And so if I am running a business, I want to make a profit, but I also have to make sure that my personal side is taken, my personal bills are taken care of as well. So start off, Ms. Williams, if you haven't made a sale of your budget, what is your personal expenses? You have to keep that, you keep that to the side. I usually do it bottom up another way, as opposed to revenue minus expenses. You got to put revenue minus expenses, but you got to put that profit in there. And that profit should be what your personal expenses are. So at least you can pay your household, right? And then that should be your starting point of your budget. Now you're going to take some of these ratios that I discussed, right, on the spreadsheet that I discussed in this webinar, and say, okay, this is my number, right? This is what I need to make in order to stay afloat personally and business. And then you can back that into these ratios that I discussed earlier. And it can tell you how much products I need to sell. What is my total number that I need to sell to make the gross profit? So say, like, for instance, I did the profitability ratio, the gross profit margin. You need to know, if you took your budget, your personal and your business budget, that's your profit. That you need to know, I need to make this amount, this net profit. So how many sales, you can back it out differently. How many sales do I need to make to reach this net profit, right? Or how many sales do I need to make this gross profit, right? So you can back those numbers in even though you don't have a sale, right? For online retail, which is better, cash or accrual. So now if you are doing on your online selling, you're not giving them that's at that point, right? Chase is the online retail is no 30-day, 10 days. They have to pay you out on the time at that moment. If they have to pay you at that moment, then you can use cash, because you're actually getting paid at that moment. You're not doing accounts receivable. It's whenever you produce the product, that's when you get paid. So whenever you do the sale, that's when you get paid. Then you can use cash because you know your income is coming in. You don't have to wait for income to come in later. So you can use cash. Okay, someone else? Any other questions that you may have? Also, remember that you need to create some type of business credit, just because you do not want to have your debt ratio high on your personal side. So I think that's so important. A lot of business owners do not think about that, but you definitely want to create some type of business credit at all times as well.
Okay, I don't see any more questions. Let me check the Q&A one last time.
Okay.
Okay, any last questions before we begin ending out with the webinar? Okay, so if we have no more questions, I want to say thank you so much to Mary for that informative presentation and for your time today.
Thank you. Thank you so much. And thank each and every one of you for spending your time with me today. Thank you.
So if you are in Essex County and you're interested in the one-on-one post-webinar consultation with Mary, you can click on the raise hand button on your screen, and I will take note of your name and create that appointment for you. Again, our one-on-one consultations are at no cost to you, so I do strongly advise taking advantage of that opportunity. Okay, at this time, I'm just going to stop my share for just one moment. I will be putting into the chat some of our upcoming webinars, as well as the link to our Eventbrite page and our website where you can request counseling. So everyone should be seeing that page or that chat message right now. I'm also putting our contact information on the screen for those of you that would like to reach out to our center so that you can speak with Mary. Our email address is there, our phone number is there, or you can just simply request one-on-one consultation at our website, www.rnsbdc.com. And if you are looking for other areas of expertise, we do have other consultants who have expertise in areas such as marketing, finances, access to capital, credit counseling, and so much more. So feel free to request counseling there, and we will help you out with your business. So back to the chat message, I do suggest that you just copy and paste these links into a Word document, just so that you can have these quick links after the webinar has ended. We do have our next upcoming webinar, which is on the 11th at 10 a.m., Independent Contractors versus Employees, and the link to that is there. You have another webinar the same day, B2B Private Labeling, Supplying a Store Brand webinar. And then after that, we have a How to Identify You've Been Hacked webinar, which is on June 23rd. And this year we are hosting many other webinars and topics such as e-commerce, state certification, cybersecurity, marketing and branding, government contracting, human resources, and so much more. So again, you can just sign up for these webinars and workshops via our website or Eventbrite page, and you will find a webinar or workshop that best fits your business needs. I also want to remind you all that you will be receiving a video replay as well as the presentation slides within 48 to 72 hours. So you can refer back to all this information. I also will be attaching the cash flow statement that Mary had mentioned as well in that email. After the webinar has ended, in the browser, you will see a survey pop up. That survey will help us to adjust our presentations in the future, as well as give us some information on the type of assistance you may be needing for your business. So if you have just a minute or two to complete that, your feedback is much appreciated. And on that note, we will now end this webinar. I want to say thank you again to Mary for sharing her expertise with us, and thank you to all of our attendees for taking the time out to attend and ask your questions today. And we look forward to seeing you all at our future webinars and workshops. Have a great day, everyone.
Thank you.
Thank you, Mary.
Thank you. Bye-bye.